Penney is in the headlines again, and no, it's not for good reasons. Investor Beat starts now. Thanks for watching. I'm Chris Hill. The market ending the week on a down note, all the major indices in the red as Wall Street keeps one eye on Washington, D.C. and the potential for a government shutdown. Joining me in studio today, Matt Argersinger. We'll get to the government shutdown in a minute. Let's talk about Penney. Shares down big again. They're planning to sell 84 million new shares, and CEO Mike Ullman just the other day had said, no, we don't need any more money. We're fine. Why are they raising this money?
That's what's really sticking to me with this story is that just a few days ago, after Goldman had come out, downgraded the stock and downgraded some of their debt, he came out and said, hey, we're all good. We have all the cash we need. And, well, apparently not, because they're diluting shareholders by 38% with this share raise. And it just, to me, says they're desperate. They're going into holiday season. They don't know if they're going to make payroll. They don't know if they're going to be able to pay their suppliers. And they need this cash, or otherwise they wouldn't issue shares at a 13-year low in the stock. So bad news.
Somewhere in the neighborhood of 200 million shares of Penney stock being traded today, making it by far the most traded stock on Wall Street. I look at this and I just wonder who's on the other side of this. Who in their right mind is buying this stock with all of the problems they've had?
I know. I mean, apparently there's some big hedge funds names in there. We've heard Kyle Bass is in there and saying he's not selling.
George
Soros. I mean, I don't know, because to me it just looks like an inevitable train wreck. I just don't think the brand is going to rebound. We know they're going into some really favorable comps. We know what they did last holiday season with the same-store sales down 32%. It should be an easy layup for them, but it doesn't look like it's going to be that way.
All right, let's move on to the government shutdown. It does seem today, for the first time, that Wall Street is starting to look at what's going on across the river here in Washington, D.C. But to what extent do you, as an investor, factor this into your thinking?
The government shutdown piece, not a whole lot. To me, it's more about what happens in a few weeks when they start really getting to the debt ceiling talks.
Right.
That's where some decisions are going to be made, or some deals are going to be made that are going to have an impact. Certainly on government services and spending and sort of the priorities of the administration. From a long-term perspective, this stuff shouldn't really bother you. I mean, a great company like Amazon, for example, is going to find a way to sell services and grow without these little sort of hiccups that we have now on the political scene.
All right, let's wrap up. Obviously, there will be some watching of the government shutdown possibility, which is on Monday. That's when the deadline is. But beyond that, what are you watching next week?
Sure. Well, also on Monday, Paychex is reporting earnings. And, many people know this is it's one of the country's biggest payroll processors, mostly for small, mid-sized companies. It's a good barometer on kind of that part of the economy. It's also an interesting taper play. What I mean is, so the Fed, is if the Fed tapers or interest rates go higher, Paychex actually makes a lot of money on interest. It collects money from companies, holds it as a float before it pays it out to employees, and it makes a lot of interest on that. So higher interest rates are actually good for Paychex. So it's an interesting company to look at for a variety of reasons.
How does Paychex do relative to some of its competitors out there?
Well, that's a good question. So ADP is its biggest competitor, but ADP is really going after a lot of the bigger companies, large corporations. Paychex is much more on the small side. That said, you do have companies like Intuit or Ultimate Software who make software as a service products that do payroll processing and do HR resources stuff. So there's some emerging competition. Paychex has got a great brand, and for a lot of companies, it's really sticky. It's hard to switch away from them. So it's got a little bit of a moat.
Okay, for Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you next time.